Good morning Platinum Traders and welcome to today's Platinum Trading Strategy video. My name's Aaron Uppal, I'm one of the senior traders here and I'll be taking you through today's strategy. Now today's strategy we're going to be talking about the Platinum Gap Trading Strategy. So trading gaps, okay? So for any of you beginners I'm going to explain what this means. Any of you advanced guys you're going to know this already. But exactly, you might have always wondered, how can you take advantage of trading gaps? You've probably seen them in the markets before. So, what are market gaps and why are they caused? Well, a market gap is essentially an area on a price chart in which there were no trades. Normally this occurs between the close of the market on one day and the next day's open. So a lot of things can cause this. So you get things like such as fundamental and political announcements coming from governors and important members of financial institutions. So for example, you could have an announcement or a speech which involves even, an initiative to collect an interest rate or something like that, and that could cause a gap in the market. So to show you on the chart, obviously this is a gap here. Any of you beginners, you'll know this is your gap in the market. You can see that there is absolutely no price in this section here. This is where the price is closed up here and opened here the following day. Now we can see effectively that from this particular, you can't take any trades in this area at all, can you? Yeah. So what tends to happen is if you do get like an initiative to cut an interest rate or something, this could result in the price opening higher than the previous day's close. And obviously in this case it's open lower. Now if that trading day continues to trade above that point or below that point, a gap will exist in the price chart. Now gaps can offer evidence that something has happened to the fundamentals or psychology of the crowd that accompanies the market movement. Now, effectively, we had a trade, and this is why I'm showing this particular chart, the GBP USD, for this particular gap on the 7th of November. Yeah. Now, the director of the FBI, James Corney, declared that they did not find any new evidence buried in those thousands of emails that they found on Anthony Weiner's laptop. If you're wondering what on earth I'm talking about, it's in regards to the Clinton inquiry that occurred about a week before the US election in regards to the emails. Now, the announcement came on a Sunday evening, just before the financial markets opened for the week. However, this new update didn't really have too much of a chance of influencing people's opinions because most people had already decided at that point who they're going to vote for. The only question was really the voter turnout. But no evidence meant that the chances of Hillary being elected were strong, and this would mean a stronger dollar. Now, the main reasons for that, well, let's think about it. If there was good news for Trump, that would be bad for the Mexican peso, bad for stocks, and good for gold and silver. And that's exactly what we saw at the time that Trump was winning the vote of the election. We saw Mexican peso going down, we saw stock markets going down, but we saw gold and silver going up because they're safe havens. Then, on the other side, when Hillary was in the lead, we saw the dollar increasing, didn't we? Yeah. So when it's good news for the Clinton, it was good for the dollar and good for crude oil. Now, effectively, with this market gap, I'm going to show you the screenshot of the trade and exactly how it was taken. So this is the trade itself, as you can see. This is a screenshot of the trade. You can see the entry of the trade below, down here. You can see the timestamp the trade was taken, the size in which it was taken, stop losses, take profits, etc, etc. Now, in terms of the trade here, we can see that we've got a clear gap. We've taken our entry in at the sell zone and we've let it ride on down. In total, this trade actually made 126 pips. Now, I'm going to explain exactly how we did that. So, number one, we waited for the market open. Number two, we waited for the 1 hour candle. Number three, we placed the Fibonacci level. Number four, we waited for the Platinum stop hunt level. Number five, we matched the Platinum trading system entry. Number six, we took the trade with a 20 pip stop loss. And number six, we aim for the 100% fib level. Okay. Now, you can clearly see from the chart that the entry was taken, analysis stated. The proof is in the pudding. Yeah. You took a cool 126 pips from a 20 pip stop. Okay. So why would you like to trade market gaps? Well, market gaps, they're not for impatient traders because they don't happen all the time. But Platinum traders use the perfect technical analysis and Platinum trading system to trade the gaps. So number one, gaps have an inherent directional bias and edge. Around 80% of market gaps are filled prior to the London Open. they happen around 4 or 5 times a month, but if a strategy works around 80% of the time, then why wouldn't you implement it? If studied with perfection, most gaps will give you around a 30 to 40 pips, depending on the currency pair, with a risk of only 20 pips. The preparation is very, very simple for market gaps. The currency brokers open at 9 o'clock GMT on the Sunday. Once they open, if there's a gap, figure out what type of gap it is. At the end of the day, if you found this video interesting and learning about different gaps in the market, then all you have to do is, we're offering a completely free one-to-one trading session with a senior trader, such as myself or one of the other guys here, and you can get to chat with them and talk about the different strategies we're using, even the market gap strategy if you wanted to use this particular strategy. And all you have to do is go to our website, Platinum Trading Academy. If you click on book a free one-to-one session at the end, name, email, phone number, standard procedure, leave your details through there and we'll get in touch with you in regards to booking a completely free session in with yourself. You'll get to see the market, see the analysis, see the chart, see exactly how we're using these strategies to create these pips all the time. At the end of the day, 126 pips, £10 a point, that's 1,200 quid before you've even started your trading week. How does that sound? But thank you very much for listening. Any questions, please just pop us an email through. I really appreciate the time. Thank you.